Hello and welcome. You're watching Money 9, India's first multilingual platform for personal finance from TV9 News Network. I am Sakshi Batra, and on this show, we're going to be discussing about market fundamentals. Where are the markets headed, and what should you do with your investments right now? To help us understand all of this, will be a very special guest joining in. Mr. Kranti Patini will join in from WealthMills Securities. But before that, let me request all our viewers to like and subscribe to our YouTube channel, and also hit that bell icon so that you can get notified whenever we add a new video as well. Also, you can stay connected with us through all our social media platforms, and also you can visit our website money9.com, where you will get to read the latest news articles and the personal finance buzz as well. Let's now welcome Mr. Kranti Batini from WealthMills Securities on Market Meter.
Hi, Sakshi.
Hi, sir. Thank you very much for taking out time for us. Help us understand this dip, this sharp crash in the markets today, of course, led by the global markets, the US federal rate hike announcements in 2023. How do you see this? Is there a further dip in the market that investors can now expect?
Sakshi, see, one thing is India is, if we compare the data in emerging markets, India is one of the best performing market in past 3 months. So, with reason, without a reason, market has to consolidate. So, timely, we have the news from Federal Reserve. Federal Reserve is currently in a hawkish mode and planning to increase the rates in the coming future by 2023 or 2024. Federal Reserve is going to be in a regime from zero interest rate policies. Of course, we should not carried away with zero interest rate policies. Such one thing we need to observe is there is always something to worry in the market. Uh, Earlier, people were most worried with respect to the zero interest rate policies of Federal Reserve. Now, when Fed says they are hawkish and the growth is coming back and inflation is going up, it is one of the positive indication we can pursue. We can't no longer always be on free liquidity and zero interest rate policies. Somewhere, the governments or the policymaker has to come out of this zero interest rate policies and negative interest rate policies. So, Federal Reserve have taken a stance. So, the initial reaction from equity markets will be negative, but it is much healthier for the health of the long-term health of the markets across the globe. So, and as per my sense at WealthMills Securities, our understanding is Federal Reserve and American policymakers, US policymakers, or European policymakers are not in a hurry to increase the rates in a hurry. Okay, it will take time, and they will ensure that enough liquidity to stay there in the markets. And one thing we need to keep always in our mind is nearly $2 trillion of money is lying in US alone in savings accounts. So if they allocate small portion towards emerging markets, especially the growth drivers are coming back in India, and India is in a best position to uh, be on a double-digit growth track. So I am sure most of the money will come to India. So use every dip, time and again. I'm telling to the investors, use every dip in Indian market. What proven in India is always Indian market is a resurgent and a resilient market. So use dip. And one thing investors need always keep in mind: don't compromise the quality. The quality is the game changer for your portfolios in wealth creation. With these markets, we have seen what we are witnessing is everybody making the money. Making money is different, but creating wealth is difficult. So when we are there in equity market, we need to aim for good to great, that is creating wealth.
Absolutely. Making money may be still easy, but creating wealth is difficult. And that's something that you really need to focus on in the markets like these as well. So, also, I'll try to understand from you. From the Indian perspective, Indian markets perspective as well, now that the US Fed has indicated rate hikes, what will this mean for the Reserve Bank of India, looking at the kind of inflation rates that we have in the domestic markets too at record high levels for the wholesale price index this week? Also, we saw that. Will that also mean that the RBI will also start to think on the lines of US Fed talking about, hinting about the rate revision at this point in time? And how will that reflect in the liquidity picture in India? We've so far seen that the foreign investors' money has really supported the rally so far. Will that immediately mean that there'll be a flight of money from here, and how should investors then see this thing panning out?
Sakshi, one thing we need to always keep in mind is India is one of the high interest rate regime. Okay, we are not a zero interest rate regime. We are in, or we are not in a negative rate interest rate regime. Okay, India is fairly RBI always have tough stance with respect to maintaining the inflation and keeping the interest rates always at a fair value. So. Y- Currently, the inflation is rising because of the supply side issues and also due to the lockdowns. So, post monsoon, our expectation at Wealth Mill Securities, there will be a slight moderation and a slight downturn with respect to the inflation is concerned. Inflation will come into control once these supply side issues are resolved. Uh, Once these lockdowns are over and the production comes into normalcy. So wait for a couple of quarters. That's very important to look into how things will pan out, how the economy come into normalcy. The lockdowns need to get over. State transportation has to become more efficient right now. So our sense is, with respect to the monetary policy of RBI is concerned, probably in US they may go for a couple of rate hikes, but Indian policymakers have a lot of headroom. They can wait, so they we can have a standard and a stabilized monetary policy. Might be in a developed market they can go for from zero to they can go for a couple of 50 basis points rate hike to in couple of years. But in India, probably we can keep our monetary policy as per the requirement, and as we are a growing nation, RBI will support the liquidity with respect to growth is concerned.
Okay, understood that as well. Let's now talk about the stocks that investors can definitely keep focus on. We'll start off with your star recommendations first and ask you, what can investors really do from here on? Let's start off with the first pick, that is Rain Industries. You had recommended on our show as well, and this stock has actually given robust returns to investors in a very short span of time. How do you see this stock panning out from here on? Would you still have a buy call on this, investment pick that you had picked for investors?
Sakshi, Rain Industries, last time on your show, we advised investors to buy in the month of April at 150, and we given a potential target of 25%. The stock has achieved the target within a span of uh, uh, 65 to 80 days. So we advise investors to take some profit from the table at this point of time, remain stay invested 50%, and try to accumulate this stock for a long-term perspective, because this company produces one of the largest calcium coke maker in the world. As we are talking about metal cycle, and aluminum cycle is coming back as auto sales are going to go up. Aluminum demand is going to go up, and Rain Calcining is Rain Industries. Earlier it was called as Rain Calcining. So
Okay.
Rain Industries is in a best position to take the advantage.
Okay, sure. So Rain Industries, book partial profits and remain invested for the long-term horizon as well. The second pick was Shriram Electric Infra as well. What would you have to say here? Again, a robust pick, which has given good returns to investors in a very short span of time again. So congratulations to you for picking out this stock as well. For investors who still have this holding after your recommendation, what should they do?
Sakshi, Schneider Infra is one of the best company with respect to the power infra is concerned. The stock has delivered nearly 28% return in past 3 months. So we educate investors to take some small profits from the table as the markets is in a consolidation phase, and try to accumulate the stock at the lower levels. Uh, what we like in this company is there will be a robust demand with respect to the power infrastructure are concerned. Power infrastructure is concerned. Post this lockdown, government is going to focus on power infra more, and the Schneider Infra with the dominant pedigree is in the best position to take the advantage of the power cycle and the capital market cycle.
Okay, again, so buy on dips can actually be followed on this stock as well. Mr. Patini, we have a live audience question as well for you. I'm sure this follower has been following your advice on our show too. Naga Bonia Naga Sandeep. It's an interesting name. He wants to ask you, sir, that can we book partial profit from Wockhardt Pharmaceuticals at the current price? I'm sure he would have followed your advice back when you had spoken about Wockhardt Pharma on our show around 420. It rose up to about 800 levels. So, it has doubled from the price that almost doubled from the time that you had spoken about. So, for such investors, for Naga, what would you advise now?
Uh, if he have the patience, he can hold on. Okay. If
Okay.
you want to take some profit from the table, just he can take some profit from the table, but he should have book profit at the level of 820. At this level, I advocate him just accumulate this stock at a if the market is giving an opportunity, just accumulate this stock for a long-term horizon. Definitely, the stock is going to give a fair better returns in the pharma sector.
Okay, so the pharmaceutical sector is going to be definitely on the uphill cycle that we are going to see, and Wockhardt Pharmaceutical will definitely benefit from the cycle ahead. In case you can still hold on to it or accumulate at these levels, please go ahead and do that because higher prices will definitely give you better returns. I hope that answers your question, Naga. Let's now move on to answer, talking about today's recommendations, sir. What would you want to recommend as a fresh pick for investors on a day like today when we are seeing a sea of red? But is there an opportunity in a stock that they can invest in for long term?
Of course, Sakshi, in the midst of chaos, okay, midst of uh, uncertainty, there will be opportunity. So market always give ample opportunity. But at this point of time, at this juncture, I want to be little conservative. Uh, so I want to educate the investors to buy Federal Bank at this point of
Okay.
time. Probably
Mhm.
most investors don't like a banking stock at this point of time, but we do like Federal Bank at this point of time. Buy this stock. The stock have a good visibility in terms of the earnings, strong management, one of the oldest private sector bank in India, and the stock, the company, the book value has been going up, and NPAs are getting reduced. So, Federal Bank, a mid-sized private sector bank, is in a well position to uh, take the advantage of the opportunity that comes in the economy. So, buy Fed Bank at every dip from this level, and the stock can deliver 25% return within a span of 1 year.
Okay, 25% upside from the current levels for Federal Bank. If you're looking at some banking major to be included in your portfolio, then definitely look at Federal Bank and do speak to your own financial advisor before taking a pick right here. Thank you very much, Mr. Patini, for speaking to us and sharing your insights on the markets and these recommendations of the stocks that you've given to our Money Nine viewers, which is helping them definitely improvise their portfolios too. Thank you. It's
Always
been a
my
pleasure.
pleasure. Always my pleasure, Sakshi, to be on your show.
Thank you so much, sir. The pleasure is ours. Let's now move on to seeing how the markets are trading at this point in time. Of course, a day when the bears are quite happy when you talk about the markets. But you can clearly see about, say, 0.2, 0.3% of a decline still persists on the Sensex and the Nifty. But they're slightly off the low point of the day, and that's a good news. Nifty Bank still under 35,000 mark, down by over 384 points. It's down over 1%. Now, the declines are actually happening in the banking space today. When you talk about the broader market space, the picture is still quite different right here, but we'll see how the sectors are emerging right now. So looking at the sectoral picture, let's see how that has changed from the first tick show until the market meter show. Well, all the sectors have now slipped into the red. Earlier, we had seen some sectors like maybe realty, IT, FMCG showing some bit of up move, but right now you can actually see that the losses have deepened as far as the metals are concerned, over a percent of loss right here. But the other stocks are also in the declining space, about 0.5% loss for most of these sectors that we are seeing right now. Let's look at the gainers and the losers also at this point in time. So the gainers actually include some of the cement majors. Now, Ultratech Cement up over 1.7%. Asian Paints, HDFC Life is inching higher at over 1% up. Nestle India from the FMCG pack is inching higher too. And Shree Cement. So the cement majors are definitely finding themselves their place in the top Nifty 50 gainers at this point. Let's look at the losers as well and see how that plays is also changing. So let's talk about Adani Ports. This stock is continuously feeling the selling pressure right from last 3 or 4 trading sessions from the time the negative news flow started. Coal India, Hero MotoCorp, Maruti. So some of the automakers are now in the red. NTPC is also seeing profit booking taking place. So some PSU packs, automakers are down in trade in today's trading session. Let's see how the markets really inch towards the close. Is it going to be a day when the bears will go in happy, or the bulls will try to regain some of the lost ground? We'll keep you posted on all of that. So like and subscribe to our channel, hit that bell icon so that you can get notified when we put out our new videos. Also stay connected with us through all our social media platforms, Twitter, Facebook, LinkedIn, and Instagram, so that you can get updated with any kind of new buzz or headline that breaks or flashes, and you can get completely in knowledge of that as too. Money9.com, our website, that's something that you need to watch out too. You can log on to that website both in English and Hindi. You'll find all the news articles on personal finance space. Stay tuned with us, Money9.com.